Right, welcome to everybody. Thank you to Byron and the team at Greatsoft for hosting this event for us. My name is Warner Lambert. I'm the Managing Director of Tax Risk Underwriting Managers. And our keynote speaker today is Dr. Daniel Erasmus. So I'd like to introduce you to Dr. Erasmus for those of you who hasn't attended one of his seminars yet. Dr. Erasmus is an international tax attorney and a professor of international tax law at the Thomas Jefferson School of Law in San Diego. He is a United States and South Africa tax court practitioner and widely recognized for his work in tax risk management, domestic and international tax for multinational organization and transfer pricing. He has published and co-authored several tax books, as well as his doctorate thesis entitled Information Gathering Powers of SARS and Audits and the Constitution. Dr. Erasmus regularly appears before the courts representing large corporates in complex tax matters in the United States, Africa, and South Africa. There are none more qualified to share with us his thoughts about today's topic, the emerging tax risks on expenditure incurred for the purposes of BEE points. Dr. Erasmus, thank you for your time today, and over to you.
Thank you for the introduction, Willem. My name is Daniel Erasmus. Some of you may have attended my webinars previously. Much of what Willem read off my CV pertains to my experience and expertise in international tax, but a lot of the work that I do is I appear as advocate, in other words, the lawyer that stands up in court defending the position of taxpayers against the likes of SARS and other revenue authorities throughout sub-Saharan Africa. And this morning's talk, or this afternoon's talk rather, is around one of the cases that I'm actually halfway through arguing in the Durban Tax Court pertaining to our BBBEE expenditure. And I thought it a very appropriate topic for the purposes of conveying some really important information to all of you, particularly those of you who are tax practitioners, because I have no doubt you are facing a myriad of verification audit requests. And I have no doubt that those of you who claim BBBEE expenditure, which is a big sort of majority of South African businesses in order to comply, especially with the ability to apply for government tenders and the like, that you are going to face increasing questions around BBBEE expenditure and will be facing the negative impact of those expenses being disallowed. But before I even go into that topic, having spent some time around South Africa recently, speaking to a lot of people in the field of your tax practitioner environment, as well as accountants, time and time again, I'm faced with two concepts. One is that there is this increasing approach by SARS to increase the number of verification audits, and those verification audits oftentimes lead to revised assessments, and most often than not, the revised assessments are not large sums of money, but they are nevertheless sums of money that your taxpayer clients have to pay. And even though, as I have lectured on numerous occasions, SARS has missed a very important step in issuing those revised assessments, namely issuing a letter of findings first, which is a very important step. The amount of the assessment is usually so small that it doesn't warrant you, the tax advisor, seeking the appropriate legal advice to have that particular assessment set aside, rectified, so that the letter of findings process can properly be brought into play, which is a very important process because it gives you, the tax practitioner, and your client the opportunity to explain why they've claimed the deduction or why they're saying it's of a revenue nature as opposed to a capital nature, or whatever the case may be. It's an incredibly important step. But because the amount that's being revised in the revised assessment is small, let's say 30 or 35,000 rand, it doesn't warrant hiring the services of a law firm such as the one that I represent or that instructs me from time to time to appear in court, because it's expensive. And here we have Willem from Tax Risk Underwriting Managers that is offering a product, and I'm sorry to start off my talk this way, but you'll understand why I'm saying so in a minute, offering a product that really for an insignificant monthly premium immediately switches on the ability of that policy to start paying the likes of myself and the people who work around me, as well as you, the tax return preparer or tax advisor or the accountant that has been saddled with the responsibility of dealing with your client's tax affairs, including this verification audit process, which goes horribly wrong, as I've just explained to you now. The policy immediately makes available the funding to fund yourselves, as well as to fund my participation to help you overcome the important legal steps that have to be taken so that the assessments can be set aside and the process can follow the correct path that it's supposed to follow. So when you have the issue of an assessment being raised for 10 or 15,000 rand, the amount is irrelevant. It doesn't matter. The policy kicks into play immediately and funds your participation. You don't have to now explain to your client that it's not your fault that SARS has picked them out for verification audit. It just happens to be one of the things that happens more and more of late, simply because SARS has stepped up their vigilance, in particular using artificial intelligence. And so we're now seeing, I think Willem gave me the numbers earlier today, over 2 million verification audits being issued or instigated by SARS. So the product is a really a very useful way to overcome the painful expenditure that has to be incurred to force SARS to do the right thing. And I believe that I don't want to say that SARS is intentionally doing this. I just wonder, I don't think that many of the auditors that are issuing these revised assessments have been properly trained to understand the important step of Section 42 in the Tax Administration Act. And many of them are unaware, or they believe that because it's a verification audit, it's not a tax audit proper. And so for that reason, they feel that they're entitled to issue these revised assessments. And of course, it's going unnoticed and it's not being addressed because taxpayers and their advisors just don't think it warrants the expense of having it set aside, hence the product that exists. So I really want to say to you that this is something that you should strongly consider, especially if you anticipate that there are going to be verification audits that are going to come your way. Willem will explain more about the product, but I don't want to create a misinterpretation of what I'm saying. The policy doesn't cover verification audits because those are simply meant to be a process whereby you hand over information to SARS and hopefully the matter goes away. If SARS takes that information and now asks you for more information, it now in essence becomes a proper tax audit. Or if SARS issues a revised assessment under the circumstances that I've just explained to you, it becomes a tax audit and assessment process that is covered by the policy. So I'm really suggesting to all of you, you are going to be facing a lot more verification audits. And when we start going down the subject matter of what I'm about to discuss with you, you'll understand that this is something that is going to raise a lot of queries from SARS, and rather have the cover than not have it, because once the audit has commenced or once the verification audit has commenced, it effectively is too late to sign up for the policy in respect of that risk item. So if you anticipate clients are going to be exposed to the BBBEE expense audit process, now is the time to act and to arrange for that cover. It doesn't undermine what you do as professionals. You are here. You are attending a lecture, and you're supposed to do so on an ongoing basis to keep your continuing education going, and that's a good thing because it keeps you technically sharp and able to address the challenges that face you and your clients on an ongoing basis. The importance of the product is that it funds that. It will fund what you do for your clients. And in instances where you now have to, as I said, bring in the additional expertise, it will fund that as well. Enough said of that. So today I want to focus on an area that is going to become an area of focus for the South African Revenue Services, and that is scrutinizing BBBEE expenditure. Now, you are going to see a systematic disallowance of this expenditure, which is unfortunate because the whole process of transformation that now has impermeated our business lives in South Africa, it seems somewhat unfair that companies are expected to spend money on these items for a variety of reasons, and we'll dig into them because they're important in understanding why I say they are deductible and how you should be able to continue claiming them as deductible expenses. But these are expenses that oftentimes are in the normal course of expenditure, seen as expenditure which might be gratuitous in nature or akin to a donation and of a capital nature. Now, you will all know that unless your donation falls within a specific category such as 18 Cap A or in any other particular specific section in the Income Tax Act, donations or gratuitous expenditure that is not in the production of income for the purposes of trade typically would be disallowed by the South African Revenue Services. And of course, if it's seen and often seen to be of a capital nature, then taking those components of what is an allowable expense, of course, it's not allowable if it's of a capital nature. And so you would ask yourselves, well, then why are we claiming the BBBEE expenses? And the reason why historically you would have claimed the BBBEE expenses is as a result of the Warner Lambert SCA case. Now, those of you who have been in practice, and I'm going to switch over to my screen, share my screen with you, if you'll just bear with me for a moment. And there we are. You should be able to see my screen, and you should be able to see some PDF documents. So here is the case that I'm talking about. And I would suggest that the case is freely available on SAFLI, SAFLII, which is the free sort of case reporting facility on the internet, where South African cases are published on an ongoing basis. And here is that particular judgment, which was handed down back in 2003. And in essence, this particular judgment was the taxpayer was an American corporation, and at the time, America had imposed sanctions against South Africa. And so it was quite difficult for a lot of American companies, such as Warner Lambert, but others such as Coca-Cola and other very big corporations that had subsidiaries in South Africa, to continue operating in South Africa and overcome the restrictions placed on them by Congress in the United States. And one of the ways this was done, just to summarize it in brief, was the Sullivan Code, which basically said if you now went and spent money on Black economic empowerment, social upliftment for the Black community, and you met the tick boxes as set out in that code, then you were entitled to continue your operations in South Africa. And so that's what American corporations did. but the very nature of that expenditure was then questionable in terms of the normal principles that apply. Was it incurred? Was the expenditure incurred in the production of income for the purposes of trade, not being of a capital nature? And in essence, the court held, yes, it was. The expense was incurred to protect the ability for the company to continue operating in South Africa and thus earn its income. And so the closeness test between the expenditure that was incurred and the production of income was in fact held to be present, and it was also held not to be of a capital nature because you were paying out these sums of money, which typically would be of a gratuitous nature, in order to protect the ability for you to continue earning income in South Africa. You were not creating an income earning structure, which would have been of a capital nature. You were paying this to protect the ability to continue earning income in South Africa. And thus the Supreme Court of Appeal, which is typically up before the Constitutional Court it took effect, was our highest court. And so this is, the binding precedent on the South African Revenue Service, as well as on all of us when it comes to interpreting provisions of the Act. Of course, where there is a departure, whenever you have a precedent of this stature, in terms of our law, the easiest way to have it not apply to your circumstances is to show that the facts and circumstances of your particular case, when it comes from a SARS perspective, your facts are different. And so they would typically argue that the BBBEE does not quite fall within the ambit of what was considered in Warner Lambert. I say that is wrong, but nevertheless, that's the basis on which they will attack it. And then they will start questioning the deductibility of all of the expenses that you have typically deducted for BBBEE purposes. Now, before we go any further, I want to just remind you of what that is. So when you look at the BBBEE legislation and rules and code of conduct that applies, it's a very complex area of law. And all companies typically will have, particularly those larger corporations that must attain very high levels of compliance. In other words, so that they are a level 1 or a level 2. And just to give you an idea, level 1 would be an entity that scores 100 points and over. So let's just take a look at a few interesting points here, talking about points. So if you look at the concept of ownership and management and control, if management management control and ownership is 100% black, in addition to which management also includes persons with disabilities and also black women. So the code of conduct and the standards that have to be met have systematically changed over the years. The big turning point was 2013, when big changes were introduced. But since then, in the last year or so, or maybe just a little bit more than that, you got bonus points if management comprised of black women as well. You'll see that your scores there total 25 plus 15, so that's 40 points out of 100. Remember, we're working towards 100, plus 4 bonus points. So if this is 100% black, you've complied with all the tick boxes there, the maximum points you're going to get is 44. So that's horribly short, 56 points short of the 100 you need. And in order to successfully tender, or not even successfully tender, in order to tender in the first place for certain government contracts, you actually have to be level 1. And if you're not level 1, you don't even qualify to submit a tender. Then over and above that, the tender requirements are slanted in your favor if you score the 100 points or more. So now you have to make sure that you're going to accumulate the missing 56 points through the next 3 items that are listed on the scorecard. And here they come, and they are typically items that would look like something of a gratuitous nature, of a capital nature. So here, skills development, amount of money focused on training and development of employees, specifically focused on Black employees. Now, remember, this is just a summary scorecard. What it doesn't tell you on the scorecard is that the skills development here doesn't only apply to your employees, it also applies to circumstances where you are helping people that are not your employees, putting them through training programs. And when you see there where it talks about the +5 bonus points, again, the 20 is made up of a formula which applies. And if memory serves me correctly, that formula is about 3% of your total salary bill. But now it's the salary bill that's reported to SARS on one of the salary forms that you've got to submit to SARS for PAYE purposes, 3% of that. So let's say you've spent 100 million on salaries, 3% of that would be 3 million. In order to get the full 20 points, you would have to have spent 3 million rand on skills development. And as I've just mentioned to you, it does not just have to be in respect of your employees. It also can be in respect of people who are not your employees. But if you then employ those persons that you've trained that are not employees, you can then qualify typically for these extra 5 bonus points. So now, that still doesn't take you to 100. So let's look at the next. So here, I want you just to reflect for a moment. There are other provisions under Section 11 and other areas within the Income Tax Act that speak to the deductibility of training expenditure and certain types of training expenditure. There's been a lot of issues around some of the training expenditure claimed by employers. So training and the education of employees is a fairly large area of the Income Tax Act. So there are a variety of areas where these expenses may already be claimable in terms of one of the other provisions of the Income Tax Act. And I just want to point out something here. When I started practicing tax back in the mid-80s, that's going back a long time, interestingly enough, you could claim an 11A deduction, and if that deduction fell within another section of 11 in the Income Tax Act, you could actually claim a double deduction, believe it or not. And then SARS had to introduce a specific, had to bring in a provision in the Income Tax Act preventing you from doing so. So you'll now see in the Income Tax Act there is a provision that does not allow you to claim these double deductions. Surprisingly, once that case was won, in fact, it was a case argued by the law firm that I was with at the time, argued that case and won. SARS then quite quickly had to close that particular loophole in the Income Tax Act. That's just an interesting side piece of information. Now we look at enterprise and supply development. So this is where oftentimes you're asked when you are brought on board as a supplier what your BBBEE status is, because that then determines on any procurement, any supplies of services and goods to an entity that is now needing to accumulate these 100 points or more, wants to make sure that they are maximizing the ability to add on to the BBBEE points. And so 40 becomes a big number. And so that's why there is a tremendous amount of focus on this preferential procurement, focusing on higher rated BBBEE-rated suppliers and supplier development for EMEs, SQEs, and Black empowered businesses. It also covers areas where a new Black supplier starts operating, that to the extent that you were to support them, you will also qualify for more points and for some of the bonus points. So, and then we get to the last one, which oftentimes is sort of seen as, I guess, part of corporate responsibility, expenditure, corporate responsibility development expenditure. This is socio-economic development. Annual socio-economic development contributions makes up that last 5%. So you can see that much of the scorecard, in order to generate the points that you need to achieve the level required, is much of it is on the expense items that are required in order to achieve those points. Now, if we start looking at each of these line items, so I mentioned under skills development, training, we're talking about training costs for Black employees. We're talking about external bursaries. We're talking about internships. We're talking about learnerships. And so what SARS is saying when it comes to these expenses is that they are not sufficiently linked to the production of income. This benefits employees personally, particularly in the case of bursaries. It's got nothing to do with generating any more income for your particular entity concerned. And it is purely social upliftment, which is gratuitous in nature and of a capital nature. So, it clearly does not fall within the ambit of Section 11A, read with Section 23(3)(g). Now, here you are going to argue and going to put forward the Warner Lambert principles. And you'll be able to say that training expenditure is deductible where it improves workforce capability, it ensures compliance with the procurement requirements that you need to meet to scale up the number of points that you need for the purposes of achieving the level, so that you can, in my example, tender to a government organization. And importantly, it protects the company's ability to operate, because if you do not comply with the BBBEE codes codes and standards of conduct in order to achieve these points, your ability to run your business and obtain business is going to be severely curtailed. And here you want to be able to show that the business that you operate is very much connected to income that comes from those entities that require you to have achieved a certain level, BBBEE status, in order to continue to operate in this environment. Now, you're wanting to ensure that in incurring that expenditure, you are avoiding commercial harm or loss of any business advantage to your particular entity concerned, your business. So these are very important connectors. So when it comes to these skill development items, it's part of the cost of maintaining workforce competitiveness. It is a requirement for securing contracts, and it is a condition for you to remain in the supply chain in the area that you operate in. So when it comes to an inquiry from SARS, now interrogating the BBBEE expenditure and you have now spent a bunch of money, as I said in my example, let's assume that three odd million, you've spent a sizable portion of that, and now you're facing the prospect of that being disallowed as an expense. And that's a fairly large hit. You do not want to say in any of the correspondence that you are exchanging with SARS, you do not want to say we're simply empowering employees or others. What you are wanting to put across to SARS is that without the training, you lose access to regulated procurement markets and contracts. And you want to be able to describe what that connection is to your business. And you're wanting to emphasize the points that I have already made, that it is part of the cost of maintaining your workforce competitiveness. Insofar as it's not training of employees, you want to promote the fact that it is a requirement for securing contracts and it's a condition for remaining in the supply chain process. Now, I want to just, before I move on to the next item and sort of delve into what you would set out in any sort of response to SARS, at the end of the day, SARS is looking for proof of this expenditure, that it aligns with what you are saying to them. And unfortunately, when it comes to providing SARS with proof, they seem never to be quite satisfied at the level of the standard of proof that applies in law. Now, in law, if we were now trying to prove these expenses, we are expected to show on a balance of probabilities. And in previous lectures, I've showed sort of my arm is horizontal, and it's a slight tilt in one direction on a balance of probabilities. Imagine the scales of justice. You need to tilt it just slightly in your favor. The evidence you're promoting must be that much more, slightly more probable than what SARS is saying, remembering that you carry the onus of proof. And so, but when it comes to the audit stage, they don't ascribe to that standard. That, you know, they want pretty much everything and anything and more before they feel that they have been convinced. So let's just dig deeper into this aspect. At the time that your client incurs this expenditure, you should be aware of, and most likely do know, that they don't know today whether or not they're going to qualify for those points. Why? Because the rules and legislation around BBBEE accumulation of points is subject to an extremely stringent BBBEE audit process. And so you have to produce every year, it's valid for 12 months, a BBBEE certificate. And that certificate comes out of the audit process that you would typically undergo, where these expense items, the skills development, the enterprise, in fact, all 5 of them are scrutinized. But for the purposes of our discussion, the last 3 would have undergone an audit process, and they would have, in looking at what you have spent, they will then want to see all the other supporting documentation that the rules require under the legislation of BBBEE. And that audit typically is only going to take place in about 18 months' time. So you've got no guarantee that you would have incurred, would have been awarded those points, although that information, because you should know that when you undergo a SARS audit, it's going to be in respect of earlier years of assessment. Hopefully, by the time they have actually decided to audit you and on this particular aspect, you would then are able to produce all of the proof that you've had to accumulate to hand over to your BBBEE auditor in order for them to tick you off and award you the points in your certificate for that period. Now, to my mind, that becomes the most valuable evidence. Although it's after the fact, it points back to the period in which you incurred this expenditure and shows that you seriously took all the necessary steps in order to incur that expenditure, in order for you to gain the points so that you could continue operating in your environment, protect your business and its ability to earn income for all the reasons that I mentioned under the skills development heading. I hope that makes sense. So those records are really important. Now, they become problematical when SARS starts going back in time. In other words, SARS goes beyond the prescription period. And I'm going to show you where SARS will go beyond the prescription period. And that may happen in virtually all instances where they decide to interrogate these expenses, these BBBEE expenses incurred by your client. So an important component of what I want to deal with after I've finished going through these items on my list. So very important that you ask your clients now to start accumulating that evidence. Many of them will not have the evidence. Now, I understand that the BBBEE auditors tend to keep, because all of the documents are submitted to them in electronic format, most of them will keep those documents for a considerable period of time, but it's a hassle getting hold of it. So you might as well start accumulating, getting your client to start accumulating that information and getting it file ready in the instance that SARS now decides to start scrutinizing and interrogating that type of expenditure, particularly where, it might be fairly large sums of money that have been claimed. Now, you're also going to benefit in being able to produce minutes of the BBBEE committee meetings that take place within your client's organization. So because these rules are constantly changing, you'll find that most larger enterprises will have a BBBEE consultant that will give them advice as to the types of expenditure they could be looking at in order to maximize the points available to them so that they continue to meet the levels that they must meet. Be nice to have minutes of those meetings, setting out, exactly what decisions were taken in respect of the expenditure that was being incurred, because it might be that some of the expenses you incurred did not ultimately meet the standards set by the BBBEE auditor, and you didn't get the points awarded. That doesn't mean to say it should be disallowed by SARS. If you had taken all steps incurring that expenditure to gain those points, but for some reason didn't achieve that, that doesn't mean to say that those amounts should be disallowed by SARS, although I can assure you that that's what SARS is going to be aiming towards as its ultimate goal. And you'll find them starting to look at that sort of detail in order to get to that point where they can disallow it on that basis. When we look at the next item, enterprise and supplier development, here once again, SARS is typically going to say this is of a capital or altruistic sort of nature. Altruistic meaning, more of a donation. There's no direct benefit to the taxpayer. It's too remote from income, where you would then once again rely on Warner Lambert saying the idea that indirect benefits are too remote, the idea that protecting a commercial position is insufficient. Well, the court held that expenditure may be incurred to secure continued business operations and still be deductible. Here you would show, again, supply development ensures continuity of supply chains, the environment in which you operate in. Without it, your business would be interrupted. You wouldn't get the work that you're currently getting. And it also reduces overall operational risk by ensuring that you meet the standards of your supplier or who you supplying in that supply chain. So you would put across to SARS that this is not a development spend, it is a supply chain risk management expenditure, and therefore should be absolutely tax deductible. And don't say we're trying to improve society. That's the ultimate aim of a lot of this type of expenditure, but you're doing it for the reasons that were put forward in Warner Lambert, and that is to maintain your ability to operate. And so when we come to procurement, preferential procurement, SARS may disallow this by saying that you are paying more for BBBEE suppliers. Might be the case. There are definite procurement inefficiencies. You're paying premium pricing. I always like to refer to the old example of, well, no one can tell you that a delivery vehicle must be a Toyota truck. It could be a Porsche. That's an extreme example. But as long as that's what's being used for the purposes of transporting your product, by way of an example, it is income incurred in the production of income for the purposes of trade, not of a capital nature. But coming back to the procurement, it is necessary for you to buy from those people. It's a commercial necessity in order for you to be able to continue to accumulate those points. Once again, relying on the Warner Lambert principles, you would then say, without this big component, the 40 points, plus those 4 bonus points, without you being able to exploit that, you would never reach the 100 points plus level. So there would be no tenders, no contracts, no revenue. Simple as that. So you're paying the price to participate in the South African economy, just like the American subsidiaries paid the price to participate in the South African economy back in the day. And that's what's driving this expenditure. Now, I want to just deal a little bit in the last sort of section of our talk. Sorry, let me just say one more thing on corporate social expenditure, the socio-economic development. Let me not just gloss over that. Here, once again, you are showing that it's not generosity. This is commercial survival expenditure in a regulated economy where you are looking to accumulate those points once again, to remain competitive, to remain in the supply chain, to be able to conduct your business. Again, pretty much the same type of reasoning that I have promoted previously. You protecting the ability of your business to operate. Now, I want to take a look at your tax returns. So remember I said to you, SARS is typically going to go back in time and open prescribed assessments. So you should be able to see on your screens where I'm circling now. You'll recall in the ITR 14, there's a block here that says expenditure incurred directly or indirectly in effecting BEE and or BBBEE compliance. And there you've got to fill an amount in. Now, you'll notice there are a number of other line items here. I want to highlight one in particular, employee expenses for training. Okay, remember I said to you earlier, you can't claim a double deduction in the Act. It's one or the other. Okay, so right. So now here arises a question, and we'll come to it now. Then we look at the next page. The next page says under the other block, which remember the other block refers to anything that's not specifically been set out in these line items as reflected in your attached annual financial statement. So when you submit this tax return, if you're a larger corporation, you are expected to attach signed annual financial statements. And I would imagine that you would even do so for smaller organizations. And if you're not doing so for smaller organizations, I would suggest that you do so. And I would be quite specific about what I write in this block here, because the annual financial statements will contain the detail that is not reflected in these line items. And you'll see from the expenses list in your typical financial statements, to the extent that you haven't specified a certain type of expense here, there are many items there that will reflect the detail of that expense. And the fact that you've now bundled it all together under other doesn't mean to say that there has been non-disclosure. You have disclosed. Remember, your financial statements, annual financial statements, form part and parcel of this return. So it's been declared. It's just in a later page. Very important to remember. So now I want to come back to this. What would you put into this block? Remembering that the cost of auditing BBBEE expenditure is going to be quite expensive, I would imagine. So is that the compliance cost that they're talking about? Or is it everything that smells like BBBEE? Well, what about the employee training expenses? Now, would you put them in here or would you put them in there because you're claiming it for BBBEE? SARS would say everything goes in here. Everything that's BEE related, directly or indirectly. You might say, well, no, I've declared it here. And then to the extent that I didn't put it in that block, I put it in the other block as set out in my annual financial statements. SARS is going to say, well, the fact that you didn't put everything in here means that there's been non-disclosure by you. There's been a misrepresentation. Because there's a misrepresentation, prescription doesn't apply. We can go back as far as we want to. And that's what they're going to do. That's what they're doing in the case that I'm arguing. So we haven't quite come to this particular point in argument, so I'm not able to give you any sort of direction as to what the court's attitude will be. But I can say this, that if there's a difference in interpretation as to what goes in this block versus what goes in the training block versus what goes in the other block, the case law is quite clear. Where there is a difference in interpretation, that cannot equate to a misrepresentation. It's a difference of interpretation. That's not a misrepresentation because you have represented the amount. As long as the amount has been represented somewhere and you didn't all put it into that block for the reasons that I've just explained, because some of it's in training, some of it's in other, that difference of interpretation cannot be regarded as misrepresentation and therefore cannot be regarded as a reason for reopening the prescribed assessments. But unfortunately, you're going to have to jump through all these hoops to ultimately either convince SARS, which you probably won't, then have to convince the person at ADR, which you probably won't, and then end up in the tax court, where hopefully then, in line with all the supporting case law that we have, you can shut out the prescribed assessments. In the case that I'm arguing, of the 4 years before the court, 3 years were previously audited. They were given a clean bill of health on a verification audit. Now, all of a sudden, on this basis that they didn't fill in that block, SARS has said misrepresentation, good to go. We can challenge those deductions in those 3 closed years. So, of course, one of the key and main arguments we will make when we get to the point of arguing, it's called an in limine argument. It's a legal argument that you would make first to say that SARS is wrong. The reason why it wasn't put in the block is, as I've just mentioned now, it's a difference in interpretation. So these are things that you need to be aware of in addressing this problem, because if you now go back to your clients, and I would suggest you do so. And remember, I said to you the trigger date is around about 2013. be interesting to see how they filled this block in. And now's the time to prepare around that. Look at that block. Look at the other blocks where there could have been a duplication. In other words, where it would be appropriate to have put something in under training. Or there's a number of other blocks, like donations, other. You might have put something there. Most likely not, because typically that would be regarded as a non-deductible item. But what was disclosed under other? Going forward, I would clearly say here that the attached annual financial statements include specificity or specifics about expenditure that does not fall into any one or more of these blocks. And if you're uncertain as to how much should have gone into, let's say, BBBEE, you'd say, in particular, certain BBBEE expenses are set out in the financial statements. Of course, with hindsight, we've got perfect 20 vision looking forward. You might as well start fixing that. And let me say this to you. If you go and look at the ITR 14 guide, you're not going to find anything that explains what I've just discussed with you. The only reference to BEE is here, where it says a repetition of that block. Doesn't explain any of the discrepancies or the different interpretations that might apply in respect of that particular line item, whether it should have been under training, or do you ignore the training and put everything under BBBEE, or whatever the case may be. There's nothing in the guide, nothing. So that's a point against SARS, because here they had the opportunity to explain that in more detail, and of course they have failed to do so. So on that score, you will no doubt be facing audits when it comes to BBBEE expenditure. I've shared with you the fact that of why it should be deductible. And in summary, if you look at expenditure in the production of income for the purposes of trade, and I said to you, it may result in that expenditure not translating into specific points being awarded because something was missing at the time of audit. Remember, what's important is the purpose of the expenditure. And you want to be able to show the purpose was to generate those points, even though it might not have resulted. And if the purpose was to generate the BBBEE points, then it should fall within the realms of those deductible provisions. But the evidence becomes really important, and that's where everybody fails. Everybody fails, or for the most part fails on that score, making it the reason why a lot of these cases end up in court. At the letter of finding stage, or prior to the letter of finding stage, leading up to the letter of finding stage, you want to give evidence from minutes, you want to give evidence from the compliance, the BBBEE compliance audits that were conducted. You want to give examples of the actual tenders. So you'll find some corporations will submit hundreds of tenders and only a handful are actually accepted. And a lot of the tender documentation is not a public record. It's not published in the government gazette. The details of the tender requirements is sent to those who apply. You want to be able to show that those tender requirements specifically stated that you had to be level 1 or whatever the case may be, so that those elements can all be tied together in proving to SARS that what you have done is deductible. And so I come full circle, and I say to you, you see, here is something unfairly. We're all expected to do this, to comply, to help in the transformation process. It doesn't stop SARS from looking to attack and disallow those expenses. It's low-lying fruit for them. They're under a huge pressure to collect more. And so you as advisors are going to face more of these inquiries and are going to have to know how to deal with them, which hopefully you will know some of what you must do. Certainly you need to start accumulating or asking clients to start accumulating that information. But should the verification audit come, expect that the initial hiccup may very well be that quick assessment. For goodness sakes, please, please, please consider taking out that Willem's product that he's going to promote to you. I've been party to this for the last 15 years, and the reason why I believe in it is because we're able to switch our engines on to assist you as the tax advisors and to pay you for the efforts that you put in. Other than that, any questions, I'm happy to answer. If you feel you don't want to ask any questions now, by all means, you are welcome to shoot me an email. I think Willem's email address is on the PowerPoint slide. Willem can forward those questions to me, or my email address is very simple. It's my name, Daniel, dot then initial N for Nicholas, dot my last name, Erasmus, at me.com. So if you have any specific questions, I'd be more than happy to assist you in answering them. But other than that, Willem, are there any specific questions raised by the delegates?
There's nothing in the chat box at the moment, Daniel. So no questions at the moment for you. We'll see if there are any questions.
I'll stick around.
Put them in. Please put your questions in the chat box, and then after absolutely. My few notes, if there's any questions, we can pick up on those and we can have a chat.
Thank you.
Right, thank you, Daniel, for the fascinating presentation. I think it's relevant to us all. I'm going to spend just 10 minutes on what we do and how we do it. Let me just share my my presentation with you all. I think you should be able to see that now. Just let me know if you can't in the chat box. Right, so
it's all good, Willem. All good.
So there. All right, excellent. Thank you very much. Let me just flip my screen here so I can see what I'm doing. Right, so I'm run this business called Tax Risk Underwriting Managers. It's effectively an insurance product where we insure tax audits and related disputes. As Daniel said this afternoon, some of these matters are small and some of them are large and complex. It doesn't matter. Both of those are important to your clients and to you. They are time consuming, they are complex, and they are sometimes very, very expensive to settle, especially if it's a complex dispute with the South African Revenue Service. So what we intend to do with an insurance product is to even the scales of justice, right? So you have SARS, that is this massive organization with all the resources in the world at their disposal, and you have your client who's maybe a small to medium-sized enterprise or an individual that has none of that. So the scales of justice aren't equal. They have you as a resource at their disposal, but you are also not an unlimited resource. Your time is valuable, and sometimes your client doesn't have the time or the money to spend on you to sort out his difficult situation. So that's unfair, right? There's this disjointment in the scales of justice where the taxpayer is not able to contest with SARS on an equal footing. So what we asked to do is that taxpayers put a small amount of money into an insurance pot, and once there is a problem, if there's an audit or there's a dispute about an unfair reassessment, then we can make those resources available to you and your client to fight SARS. I always say, if you want to win a fight with a big dog, you bring a bigger dog. So we have the resources available to do that. So that's the definition of what tax risk insurance is. It's effective insurance against SARS tax audits and related disputes. If an individual, a business, or a trust is selected for audit by SARS, or if there is a dispute about an unfair tax assessment in terms of which SARS is demanding additional taxes, then tax risk insurance will appoint and pay for the team of tax professionals to deal with the matter, ensuring a fair tax audit dispute outcome. So why is this important? This graph here shows the economic growth in South Africa since 2019. This is not new news. The economy hasn't grown at a rapid rate. In fact, growth rates over this period has been less than 1%, which is not good. And one would then automatically assume that if the economy is not growing, then SARS is not able to extract more taxes. But that's in fact not the case. So here is the SARS collections over the same period. And as you can see on a year-on-year basis, it far exceeds the 1% of economic growth that the country has seen. So the bottom line is SARS is able to extract more tax from a base that's not growing. And they can do this only in two matters. One is to introduce new tax categories. You'll remember sugar tax not so long ago and fuel levies, and then also SARS's attempt to introduce 2% additional VAT last year during the budget speech, which didn't work. So, but that only is a drop in the ocean. The way they collect more taxes is to be more effective at what they are doing. And it's not getting any better, right? You'll remember from last year's tax budget speech by the Minister of Finance, we allocated an additional 3.5 billion rand to SARS in the current financial year, which of course was the last financial year, and then another 4 billion rand over the medium term. So government has given SARS 7.5 billion rand to develop their resources to collect more taxes. So here's another article a couple of months later from that budget speech, which says SARS will have to go all out to justify this massive cash injection. Kieswetter, since April, has employed an additional 500 debt collectors. Another 250 will be added to SARS payroll in June, which of course June last year, which of course now has happened. So SARS takes the money to employ more tax collectors and then also to invest in technology. So not only do they have more people to collect taxes, they use technology to be more efficient at what they are doing. So more people doing work far quicker than they have before. And it's been in the media that SARS is developing these activities through the use of artificial intelligence and other mechanisms. And these are just some highlights in the media since January this year. There's been a lot in the media, and I don't think I need to tell you that. So things are not going to get any better. This is the report from Cliff Decker-Hofmeyer following the budget speech this year, which says, it's a bit small, so I'll read it for you. The 2025 budget and 2025 medium-term budget estimate that SARS would collect between 20 billion and 50 billion rand in additional tax revenue by increasing total tax debt collection from 95 billion to 120 billion in 2025-2026. This projected increase formed part of the revenue assumption for the fiscal year. To support the objective, SARS was allocated an additional 7 billion rand over the medium-term expenditure framework period and recruited approximately 1,500 additional debt collectors. The additional funding was aimed at strengthening enforcement capacity and improving recovery. So I don't need to tell you as tax practitioners that the heat is on, your clients under more intense scrutiny, and the pressure release valve sits in your practice. Because I'm sure I deal with a lot of tax practitioners, they are my clients. There is a lot of noise in your practice from SARS issuing verifications, bulk verifications, and large amounts of information, which then often is followed by audits, which starts incorrectly, or then unfair or disputable reassessments. And to deal with all those in your tax practice, I don't need to tell you, takes a lot of effort and time, and your time is your money. So as I said before, our intention is to relieve that pressure to a certain extent in your practice and for your clients through an insurance product. So the benefits: it removes the uncertainty of an unexpected SARS audit and related dispute, right? Your client or you don't need to do something wrong to be selected for audit or to receive an unfair assessment. I think that goes without saying. So in our experience, these audits or the unfair assessments are almost always uncertain. It's unexpected. You have done your work correctly, yet now you get this into your office and it's unfair. So it's the principles of insurance is that this event is uncertain, and that fulfills that principle of insurance. Premiums are affordable, So we're really asking for a little bit of money to employ a large hammer. Cover is retrospective and there are no waiting periods. So that's very important. So if your client buys his cover today and SARS writes in a letter next week demanding additional taxes in lieu of a assessment of, say, 5 years ago, you have cover. Of course, you can't have an existing problem coming into the policy. It's still insurance after all. You can't have the car accident and then buy the insurance cover. But cover is retrospective. So as long as you weren't aware that there's a problem, you will be on cover. Some of South Africa's best tax specialists are appointed to defend claims, including the likes of Dr. Daniel Erasmus and the team around him, and a myriad of other expertise in the South African environment that we have access to, because this is the only thing we do, so we have quite extensive networks. Importantly for you as the tax practitioner, your own fees are covered for the duration of the claim. So if your clients are covered, no longer do you have to do the work for free or write off a portion of your fees. Your fees, you remain the central part of running the dispute or running the audit, and we will cover your cost, which means you can give a professional to your service to your clients without having to invoice him for it. And in addition to, especially if it's a complex matter and it requires legal assistance, sometimes or mostly we're able to resolve matters on procedural grounds, not on the tax accounting principles, but SARS has violated some other procedure. For example, they did not issue a letter of findings in terms of Section 42 of the Tax Administration Act, which makes that assessment automatically invalid. Right, so these are some of the legal principles we can bring to you as your client's tax practitioner to strengthen your hand and to make sure we resolve your dispute with SARS as efficiently and as quickly as possible. That is in your best interest to resolve a dispute quickly. It is in your client's best interest to resolve a dispute quickly. And it is in us as the insurance company that picks up the bill's best interest to resolve that dispute quickly. So our interests are perfectly aligned in this case. So it's peace of mind when you need it most. So just very quickly, how do you apply? So this is what our application form looks like. It's a one-pager. So it's no long completions of application forms. The top part tells us who your client is, or your client fills it in as the insured party. It's the same application form for companies, for individuals, or for trusts. Of course, trust is a particular target for SARS, so it's important we bring those on board. The middle part is where your clients put his bank account so we can deduct the premiums. And the bottom part is some underwriting questions. So we're really trying to understand your client's tax history, so we are able to evaluate the risk properly as an insurance provider and then adjust premiums or cover if required. So it's 7 simple yes or no questions, and we then ask your clients to answer those things honestly so we can understand what the nature of the risk is. Right, so it's a one-page application form. He signs at the bottom and sends it in to us. The second page, and in fact, this is the last page of the application form, are the rates and indemnity limits. So you don't need to phone me every time you need an insurance quote, because we give you what the prices are. So for companies, we look at your client's annual turnover. Smaller companies pay less, larger companies pay more. We'll zoom on that shortly. And for individuals, we look at the taxable income for the last financial year. So people who earn less pay less, and people who earn more pay more. It's fairly straightforward. And then the front page of the application form is really just a summary of the cover. We've highlighted the most important aspects of what the story is with this product, including what's covered and what's not covered, which is often the most important part of a policy, is what is not covered. So it's a one-page summary of the cover, and your client can immediately understand what is covered for and not covered for. In addition to, we run regular online training sessions similar to this, where we get into the nitty-gritty of the terms and conditions. You are welcome to attend any one of those sessions. We'll invite you when the sessions come up. But if you want to do some interim research on what the product is, you go to my website, www.taxrisk.co.za. There's a whole bunch of information there. You can download application forms. There's some training material there and a video recording of the training session. Importantly, you as a tax practitioner is probably not an authorized financial services provider in terms of the FAIRS Act, which means that you can't sell insurance or give insurance advice. Therefore, in all cases, we will, if you're not an authorized FSP, we will team you up with an insurance broker who is an authorized FSP. It might be somebody that you already know that you have a relationship with, or alternatively, we'll bring in one of our currently accredited insurance brokers to team up with you to do the actual sale process. But what you can do for your clients is inform them about the risk, and you can tell them how to get covered. You can even hand them the insurance policy. But you can't take it down for them. You can't handle the paperwork. That's the role of the broker. So give me a shout. We have a national network of around 120 accredited brokers that's attended my training. We have agreements with them. So we distribute our products through this national network of brokers. But if you have a friend that you want to use in this program, give me a shout and we'll do the necessary to sign that broker up to service you. Right, to give you an idea of the premiums, this is what our rate chart looks like. As I said, for companies, we look at the company's annual turnover in the last financial year. So if you're a small company of 3 million Rand or less, then your monthly premium is 265 Rand a month. If you're a 100 million Rand turnover company, then your premium is 1,540 Rand a month. On the right-hand side is the limits of the cover. So there are limits, but we put that up front so your client knows what, and you would know what you're covered for. Premium is really not significant considering the problems that taxpayers regularly run into. It's a risk. Your client is currently self-insuring that risk for the most part. So if something happens to them, this is coming out of his own pocket. He's got to find his own services provider. He's got to knock on your door, and hopefully he still pays you. So what we are proposing is that for a small amount of premium you put into the insurance pot, you can insure this risk. Similarly to insuring your car, you can choose to not insure your car, but you know there's a risk when you drive out your front gate that you'll be in an accident. So most responsible people decide that they'd rather buy insurance so that when that unforeseen event happens, that the insurance company will pick up the tab for the repair of the car, or replace the car if it's stolen or whatever the situation might be. So it's insurance in its typical form. Your client has a risk. You can either self-insure the risk, or you can ask the insurance company to carry that risk on your behalf. And that's the plan. So there's also the rate chart for individuals. As I said, we use the taxable income to determine the premium. We have a similar rate chart for trusts, which is in the brochure, which we will send you in due course. Right, I think that's the end of my song and dance. There's my contact details. By all means, go to my website, www.taxrisk.co.za. There's a whole bunch of information there. That's my email address. You're welcome to contact me directly if you have any questions. Willem@taxrisk.co.za, and there's my cell phone number also. My cell phone number is often the easiest to get hold of me because I travel quite a bit, but there's also an office number on my website if you need to contact me via the office. So that is it from my song and dance. I think there's been a question or two, Daniel. Maybe we can address those.
Sure.
So the first question comes from Shane. Shane said, shouldn't government or SARS make companies investments in training as a huge tax incentive? That's his first question.
Is that a question or is it a statement?
No, it's a question. Well, I suppose it's a rhetorical question. Shouldn't government or SARS make companies investments in training a huge tax incentive? Now, there's something like the Employment Tax Incentives Act, right? Which is full of bullet holes in any event.
Yeah. All of these things, I mean, philosophically, that's quite right, but that's not what happens. So, again, I come back to what I said. SARS is chasing every rand that they can lay their hands on. They're under a lot of pressure. They're using very sophisticated systems, which, apparently very sophisticated systems. I'm not sure it always works out that way. Despite those incentives, if you don't comply with their interpretation of the rules, you are going to be facing severe problems. But yeah, they should really be making, they should at least set out a guide as to how they see the BBBEE expenses being claimed as deductions, as opposed to just leaving this void as it currently stands. But that's where we're at, and which is why I'm saying to all of you, this is one of the areas you are going to be facing if your clients are operating in that field, and you might as well now start preparing for that. And in my view, the best preparation is get the cost base ready. I mean, the product offering, I think, is a no-brainer.
Thank you. Lynn says, we are accredited brokers, F-Scott Financial Services. Hello, Lynn. We know about F-Scott. Welcome here. Good to see the brokers also online today. Shane also asks, SaaS systems are so slow as it is. How can SaaS really say they have software that makes workflow quicker? I think it's probably at what end of SaaS's workflow you are at, if they are quicker or more efficient or not, right?
So they are definitely using artificial intelligence to determine what they should be auditing. So that's, of course, in that particular area of the South African Revenue Services machine. That's not a reflection on how e-filing is working or interacting with them. So point taken. Let me say this to you, that what I repeated earlier, if you are expecting verification audits, I would honestly urge you and your clients to enroll for this product sooner than later. Don't wait for the verification audit to hit your desk. It's going to come. And at this point, when you fill in that one pager, you can with absolute certainty say that you're not the current subject of an audit, which means that the cover will be in play once that audit goes in the direction that I explained, which it most likely will. So, even with SaaS's inefficient systems, the next seminar that I'm going to be presenting in a few weeks' time, the next particular area that requires some skills training is this whole issue of Section 42 and the failure by SARS to issue a letter of findings, what steps you can take as advisors. There are numerous steps which you can take in an attempt to remedy that. And I'm going to be sharing with you the opportunities that arise, what you should be doing when SARS sends you the verification audit letter. There's an engagement letter that I've drafted, which I will share with all of you, that you should be uploading to e-filing to help SARS and remind them of the steps that they need to take before they issue revised assessments. So these are areas that we focus on in training to ensure that you're up to speed and you can prevent this onslaught, or certainly when it does come, deal with it effectively.
I think that's all the questions for now. I think we come to the end of this session. Daniel, thank you for your time.
Yep. Thank you.
Just the next slide is, as you mentioned, there's another webinar coming up. So for the attendees today, make a note. Look out for the invitation, which you will see emailed to you via the Great Soft people. It's on the 14th of April at the same time slot. And as Daniel said, the theme of the session is dealing with SARS verification audits and the quick revised assessments issued by SARS and interpreting the news. Constitutional Court judgment of United Magnanees of Kalahari Pty Limited versus SARS refers. So that's on the 14th.
Willem, if I could just mention, that particular judgment is particularly important, and I'm going to extract out of it some of the complexities that now face you as tax practitioners in disputes that you have with SARS. There's been another very recent judgment handed down by the full bench in Gauteng, literally on the 13th of March, on a transfer pricing matter, but it's nothing really. The important elements are not on the transfer pricing, but what SARS is allowed to do and not allowed to do in their Rule 31 once a dispute is on its way to the tax court. So these are very important principles I want to share with you that is going to make your life a lot easier in representing your clients.
Yes, there's another webinar coming up after the 14th of April, so we'll share some information about that with the audience. I think that is all for today. Just for me to say thank you to Greatsoft, to Byron and the team for allowing us to speak to your clients and to your networks, and then also everybody else that attended. Thank you for your time. I hope you found it interesting. You have my email address. If you have any questions for Daniel, please email me. I'll pass that on. Daniel has given his email address, and you're more than welcome to give us to ask us any questions. Give us a few days to prepare your CPD certificates. If you're a tax practitioner, you'll receive your CPD certificates. Otherwise, we'll see you all hopefully on the 14th of April. Thank you, Daniel, for your attention.
Thank you. Thank you, everyone.
Everybody.
Thank you, guys. Thanks. Thank you.